What's up, fellas? We got another video today. Today's gonna be a longer type of video. We're pretty much gonna go over my entire trading strategy, um, how I view the market, how I trade the market, how I understand it, everything you could ask. Feel free to ask questions in the comments. I'll be glad to answer them for you guys, help you guys out. And I have a free Discord in my bio if you guys need any help. I don't charge nothing, not a mentorship, anything. I just like to help some beginner traders off on their journey and get them off the right foot, fucking ass starting this shit, but it can definitely help some people out. But let's get into this. Um, we're gonna go over the entire strategy. Got a couple of things written down, and then we got a bunch of examples. I'm gonna give you guys some good examples, some bad examples, just pretty much an overall review of how I trade. Um, start with how I view the market, right? The market moves and it makes higher highs and higher lows, and it makes lower lows and lower highs, right? We're trending bearish, we're making lower lows and lower highs, we're moving down. We're trading bullish, we're making higher highs and higher lows, trading upwards. Knowing this, we know that the market is going to move in one of those directions. If it's not, it's called consolidation, meaning it's not making higher highs or higher lows or lower lows or lower highs. It's just moving in a straight line across, looks like a barcode. We'll get over that. But what I do want y'all to know is when we make these moves, the market pulls back by same thing, making higher highs and higher lows. We got to pull back to make a low. Go higher, we pull back, and then if the market is still bullish, we continue in that uptrend. We continue making higher highs and higher lows. If it's not, we reverse and we start trading down. But when we're looking to trade, we look for a pullback and then displacement. We want the market to be trending in a certain direction, making a higher high, pullback, making a higher high, pullback, making a higher high, continuing in that trend, right? We're trending upwards. Like we just talked about, market pullback, pulls back and continues in the direction it's going until we see a reversal and the trend changes. Market is always seeking something. It's always looking for something to take out, whether it's liquidity, big orders at a certain price, making new highs. It's always trending towards something. It's never just, that's what we call consolidation. So I can't really say it's always trending towards something. But when it is trending towards what we like to say a draw on liquidity, what we have right here. What is exactly a draw on liquidity? Is it a place in price where market needs to go past that area in order to continue the trend, right? We're trending higher, making higher highs and higher lows, and we have a high off to the left. We need to take out that high in order to continue in a bullish trend, right? A lot of people use draw on liquidity as like actual liquidity where they will take a sweep and all that. No, I trade towards that. I want to be the one exiting where they're looking for the reversal. So I trade towards that draw on liquidity because in order for price to reverse whatever it wants to do at that area, it needs to go past that. If we're bullish, it's going to make a higher high past that. If it's bearish, it's going to reverse off here, right? So I just trade what I know works, and that is trading towards the draw on liquidity. So, continuation strategy. Like I was just saying, trade with the trend. If price is trading bullish, I'm going to look for a draw on liquidity to the left, and I'm going to trade a bullish trend. If price is going lower, I'm going to look to the left, see if we can find a low, and continue to trade lower. I will never try to catch a reversal off of something, or like just in general. I will never try to trade against the high time frame market. It's always the high time frame you want to keep an eye on for this continuation strategy. The high time frame's consolidating, don't trade. If it's trending bullish, trade bullish. If it's trending bearish, trend bearish. Price moves the same on the low time frame, right? Still on the low time frame, consolidates, it can consolidate, it can move bullish, making higher highs and higher lows, bearish, making lower lows and lower highs. So the way I trade it is I wait for a pullback on the low time frame and a continuation on the low time frame towards our high time frame draw on liquidity. So I say, okay, in order for price to continue bullish here, we need to take out this high on the left. So once I have that done, market's trending on the high time frame, we have our draw on liquidity, scale down to the low time frame, and what I want to see is a pullback in price and then a big displacement candle invalidating a retrace, meaning we are continuing to go up, right? We're trending up, we pull back, and then we start going up again. Once we start going up again, that's when I like to take my entry towards the draw on liquidity. That's pretty much how I view the market and how I trade it. Nothing too crazy there. Hopefully you all understand that. Pretty much all you need to know is market trends up. We'll just go to these pictures now. Fuck it. We'll do this after because we're talking about all the high time frame stuff. This is what a trending bullish market looks like. I don't have a picture of a bearish market. I can pull one up. I can let you guys know, but this is what a market should look like, right? And you can see, bang, moving higher, pullback, higher pullback, higher pullback, higher pullback. We continue this trend until we hit something significant that makes us pull a reversal and we start trending downwards. But right now, see, higher high or higher low, higher low, higher low, higher low. Making a lower low would mean we were in a bearish trend, but we were making higher lows, meaning prices continuing to go up. So what it looks like on an actual chart, as you can see, up, down, up, down, up, down, up, down, up, down, up, down, just pretty much continuing this whole entire trend up, making higher highs and higher lows, and we're not trending down. This is what a choppy market looks like. Move sideways. Perfect example down here. Price is not trending whatsoever like this. See how this is pretty much just straight up. Got some pullbacks in there, but then we continue to go up. This one, pull back, up, fail to take the high, up, fail to take the low, pull back, super consolidated, just very, very choppy. Everything is very improbable in here, as you can see. Say you want to take this trade up to this high, bang, get edge, bang. And it's just very, very improbable. You want to stay away from that. Just say. Yep, we don't want to trade in the choppy conditions. It's very improbable. This is what you want to trade in. Perfect displacement towards the upside, showing we want to go higher. Right. How I trade my strategy. Market needs to be moving in a direction on the high time frame. If we're consolidating, like I just said, that means there is no trading at all. We do not trade. If price is consolidating, it's just going to be lower probability, and most things are not going to play out. If we are trending, like I said right here, look at how easy everything will play out. We make the pullback, and then we make the move higher. We make the pullback, make the move higher. Make the pullback, make the move higher. All you need to do is catch a piece of that. We need to have a high, after we have market moving on the high time frame, meaning this, we need to have a high probability draw on liquidity, meaning price needs to hit this in order to continue in this direction. So yes, all of these lows are drawing liquidity. Every single low and high you could say is drawing liquidity. What makes it a high probable drawing liquidity is price needing to take out that high, right? So right here, we're moving higher, bang, high, low, high, low, high, low. Let's say right here we're at in price right now. This is on the high time frame. Remember, it's going to be hard to explain right here until I get on the charts. But now let's zoom down to the low time frame right here. We're in the low time, or we're in a high time frame pullback. What does price need to hit in order to go higher? Well, we need to hit, let me see if I can open this. What does price need to hit when we are down here to go higher? This high up here. If we do not hit this high, we are not going to be bullish anymore. We're going to go lower, right? That would indicate us making a lower high by not sweeping this high out. So I want to trade up to this high because we're in a bullish trend. Odds are we're going to take out this next high. So low time frame. Sitting right here, what do I need to see in order to take a trade up to this high? We need to move up on the low time frame, pull back on the low time frame, continue on the low time frame. I take my entry up toward this high. So good draw on liquidity would not be any of these lows because we are trending up. So price does not need to take out these lows in order to go higher. Price needs to take out each one of these little highs we make in order to go higher and push price higher, or else we're in a bearish trend and we trade lower down to these lows, which would need to be taken out in order to continue the bearish trend. Hopefully y'all are following along now. But once we have our high probability draw on liquidity, low time frame must be trending the same direction. Yes, you are going to have like what I just talked about. We're bearish on the low time frame, but you always want to zoom out. If the high time frame is bullish, you want to be taking a bullish trend or bullish trade, my bad. Just because it's bearish right here does not mean that the entire high time frame is bearish. This is just a pullback to go higher. So you would look for a trade somewhere around here once we confirm that this is a good high time frame pullback. So that is why I just said, what would we wait for at this low? We would wait for price to initially make its move up, pull back, and then I would take that continuation right there. So we wouldn't take it just straight off this low, because who knows if this low is going to go lower, take out this low, make a lower, then we're trending bearish. So I always wait for confirmation that this is going to be our next strong liquidity, and we're confirming that this is the low or the retrace, and we're going to take out this high next. Once we have that, like I said, low time frame must give me a pullback in price. I would never take the top or the bottom of the move. So I'm actually going to start drawing shit out in here just because it'll be easier. But let's say, bang, we have our drawing liquidity up there, right? High time frame. This is our drawing liquidity. In order for price to move higher and continue this trend, we need to take out this drawing liquidity, right? Price makes its pullback. Now we're on the low time frame. This is just our high trend or our high stock. High time frame draw liquidity. Do not worry about this on the high time frame, what I'm about to draw. This is strictly for the low time frame. So this is our draw liquidity up here. We need to take a low time frame trade up to there. Point of the retrace, like I was saying, we retrace. In order for price to move higher, we now need to go to this high. So initially, I want to see price make a move up. This is confirming that this retrace is holding and that we're going to go higher because we are not taking out that low. Then I need to see price pull back again and then continue to go higher. And that's why I will take my entry right here, stop loss below this low, and take profit at the high. Because this, in order for price to continue this high time frame bullish trend, we need to take out this strong liquidity or this high up here, or else price will be bearish and we will trade lower. So hopefully that was a pretty good explanation for how I trade. We're getting into some examples, but hopefully that helps. Like I just said, price needs to confirm the pullback. Confirm that the pullback is holding by displacing back towards the direction of the drawn liquidity, and we need to be moving strongly with volume. That's a key thing. I'll show you guys what volume is and how it looks like, but that's about it. My stop loss needs to be protected somewhere where price will invalidate my trade setup or the trend. So I like to put that on lows. So let's say we want to take a trade here, put my stop loss at this low. Why? Because if we take out that low, trend changes. We're making lower highs and lower lows, and that means that we're trending bearish and my trade is wrong. So that would invalidate my entire setup. You don't want something where you can get wicked out and then price can go higher. You want something that completely invalidates your setup if you get stopped out. Lastly, we need to have an internal lower high to go break even at. That would be, I think I deleted it, but we're looking to trade up. We got our pullback, displacement, take our entry right here, stop loss at this low, because in order for price to move lower, we need to take out that low, and we're expecting price to go higher here. Drawing liquidity up here. Let's just say we're going to draw liquidity right here. This is the internal high I would take, I would go break even at. So let's say price hits this. Move my stop loss to get break even. I'm not risking anything. Then I can bullshit, or I can go up to my draw liquidity, either one. But I'm mitigating my risk there, and I'm not losing anything on the trade. All right, let's get into some good examples now. We pretty much went over what I was going to go over next. Just I'll try and make it a little easier for you guys real quick. High time frame, right? This is what the high time frame is looking like. Making higher highs, higher lows. So this is what we're going to say. We're in this point of price right here. This is our drawing liquidity up here. And now I'm pretty much going to go next to it and draw what the low time frame would look like. Low time frame would just look the same, but more pullbacks and more displacement candles, just because it's the low time frame. So what I need to see in order to take my entry, just say this is the low time frame. This is the retrace we were in right here, right? This downside move on the high time frame looks something like this on the low time frame, just because there's going to be more candles, so it'll have more lows and highs. But this is pretty much what we want to look for. Price is moving higher. Just say this is full trend right here. We make that pullback. What do I need to see then? A flip. We get that flip right here. What do I need to see again? A pullback, and then we continue to go. So I'll take my entry somewhere around here, stop loss below this, and then I will target the high that we were saying. Obviously, it wouldn't be that RR. It'd probably be a little more something like this. Let's just say this is the move down. I want to see that flip, pullback, and continue to go higher. And hopefully, from this point, we pretty much just flush and take out that draw liquidity. This is what an A+ example would look like. Straight up to the draw liquidity. We have our internal high we go break even at. Price has been trending the entire time. We're in a high time frame pullback, and we want to see price continue up to that internal or that external drawn liquidity. Hopefully those are some good examples. We'll get into some actual candlestick examples now. All right, number one. I'm going to start in the high time frame. You can see price obviously moving lower here, making lower lows, lower highs, lower lows, lower highs, continuing to move lower. So after that, I zoom out. What do we have? In order for price to continue this bearish trend right here, we need to take out this low, right? If price does not take out that low, we are most likely going to go higher. So in order for price to continue this trend, we need to take out this low, right? It's in the way. If we don't take out this low, we'll go higher, and then my trade's invalid. So coming into the day, I'm saying, okay, I need to see price take out this, or I want to see price take out this low in order for price to continue this bearish trend. So I'll sit on like the 15-minute or the 5-minute. Price is clearly moving lower on the 5-minute. We're making lower highs and lower lows. Then I come into market open. I'm like, all right, we are pretty much already confirmed we're going lower here. All I need to see is a pullback in price and displacement. So what do? We open, we go lower, we pull back, and we displace, and I take my entry. Why did I really like this? Well, you see, bang, we make a high. Here's our low. Bang, here's our other high. It's a little bit high or a little bit lower, but it's fine. Bang, lower low. Bang, lower high. Something that stuck out to me here is us making a lower high here. A lot of people would have looked for like a sweep of liquidity here and then something lower, but I don't like that because this is actually showing us the trend, right? We're making a lower high, confirming we're bearish, and we're making a lower low, confirming we're bearish. So coming into this, I'm saying, okay, we got our retrace into a little 5-minute fair value gap here. Hopefully you guys know what that is. All I need to look for here is a nice displacement candle. And what do we get? 181 tick candle to the downside. So I see this and I'm saying, okay, this retrace got completely invalidated by this candle. We see how slow price was moving to get up, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 candles. It took us to get from here to here. And then once we get bearish candles, it takes us 2 candles to invalidate this entire retrace we just had. So that's telling me 11 bullish candles to go higher, 2 bearish candles to go lower. That's showing me sellers stepped in and that sellers are actually selling the stock right now and price continues to go lower. What else do we have? We have my internal low right here. My internal low, I go break even at. So once price hit this low, hit this line, I go break even. Stop loss at the high. Why? Because if price does something like this, takes out that high, then it invalidates my setup. This made a lower high right here, so why should there be a higher high? There should be no higher high if we're trading down. So to put this in simplest terms, price is moving lower, we get our retrace, and the main thing you need to look at is how much bigger these candles are compared to our retrace up. This is showing buyers. This is super slow moving up. Super, super, super slow. It takes hella candles to get us up there, and then 2 candles to bring us this far down. That's showing how many sellers are here, and price is most likely going to flush down towards these lows. What do we get? We get it to this low. What does price do after? Consolidate. Why? Because when we take out our drawn liquidity, we either consolidate or we reverse. Most of the time, we will not go lower. We just consolidate this entire time. So hopefully that's a good first example for you guys. I think this is one of the best ones because you can see we're trending lower. We have our drawn liquidity. In order for price to continue making this move lower, we need to take this out. Then same thing on the high time frame. Move lower, get a retrace, continue to go down. And the only reason I knew, or I wouldn't say I know, but I was very, very confident in this going lower is because of these 2 bearish candles right here. We can just see how much, this is the volume I'm talking about. See how much volume we have when sellers step in compared to buyers. This means that buyers have been invalidated and sellers have stepped over, meaning price will most likely flush lower. Good first example, I think. Here we got another one, trending lower. This is a better example in my opinion. Trending lower, obviously, making lower highs and lower lows. So you swept this one out, made a lower low. What do I need to see now? Retrace displacement. In order for price to continue this bearish trend, we must take out this low right here. These are one of my favorite drawn liquidities because this is the low of the retrace. Like you could have a low down here that you're like, all right, maybe that takes it out. But in order for price to actually make that move and confirm this retrace, this would be the lower low. That's why I really like these draws because this is making the lower low, confirming the draw or confirming the retrace. So coming into market open, what do we get? Get a huge downside move off of open. This is where I'm like, all right, price is most likely going to flush lower. I really like this displacement lower. And we also left a great 5-minute gap right here. 5-minute fair value gap, we learned about that. Price likes to reject that if we are confirming bias. So we get our retrace. See how slow these candles are. 1, 2, 3, 4, 5. 5 candles, gets invalidated by one bearish candle, 182 ticks again, and we take our entry there. Internal low is where we go break even, and the external low is our draw on liquidity, because in order for price to continue this trend, we need to take out this low. So you can see we retraced on the higher time frame. We dumped during market open. This is like, all right, we should flush lower to this now, but there's always retraces on the lower time frame. So what do we get? A nice retrace up into this gap, and then we get a huge candle to the downside, confirming this bearish bias that we will go lower. And what do? Just flush straight towards the draw on liquidity. I'm not sure if this stay chopped after, we can check, but most of the time price will just chop or reverse after you take out that draw on liquidity. It's look like, yep, very, very slow movement as we see. So this is just to prove, do not trade after your draw on liquidity gets taken. It is very, very low probability. But we see high time frame, it might even look better. 15-minute, go lower, we get that retrace, and we continue lower, right? It's pretty that simple, guys. Price moves up, we retrace, continue up. Retrace, we continue up. Retrace, we continue up. It's called a continuation strategy for a reason. That's what price did here. We retraced up, got our move down. This move down is pretty much just confirming that this is a good retrace and that we will go lower after this retrace. You don't need to see this. Like, say we're taking a high time frame trade, you have the same thing. Price moves up, we get that retrace, we get that nice candle down, and price continues to that low. So that's just pretty much what I'm looking for on the low time frame, like the 1 minute. That's what I was looking for here. Price moved up, lower, retrace, lower, retrace, lower, retrace. Same thing happens every single time. Now we got some examples of bad trades. All right, let's go on the high time frame first. Look at how slow price is moving right here. Price is not moving. It's very slow compared to like this, or like that. This bullish right here, it's very, very slow. What do we have high time frame? 4-hour fair value gap. So the one thing I will say to you guys about a 4-hour fair value gap, it is very hard to predict whether price is going to hit it or not. You know, you want to expect it to get hit because price is always going to need to make a retrace. But the thing I've learned is it's just not probable. It's not probable enough to take a trade towards it, so I stopped doing it. It's just not like price does not need to come and hit this 4-hour in order to go back towards this low, right? So I sort of learned that, just stop taking those trades. But what did I see coming into this, right? Price came down, made this low, we then pushed up, made a higher high, and what did I see after that? Retrace, and then a nice big fat candle to the upside. So I was like, all right, this 4-hour is most likely going to hit. It did not. It stopped me out, and main reason why, 4-hour gap. Also, we look on like the 15-minute. Look at how choppy this is. 5-minute looks a little bit better just for market open, but look at this. We're sitting in that little range the entire time. Can even go before. We're just sitting in this range. We're not actually moving, making higher highs or higher lows. We're pretty much just sitting in that range. So that is something we don't want to trade. Looks even worse in the 1 minute, but that is something we definitely do not want to trade. So this is a terrible example. We don't want to take trades that look like this. But like, it's just mainly draw liquidity and how price is moving. It's very choppy. You want to see something more like this when we're trading. Bang, swift move down, nice retrace, bang, another swift move down. Same thing here, nice move down, retrace, continue going lower. Look at this, we're ranging the entire time on the left as well. Look at this, we're making a nice move down. Look at this one, made a nice move up. We're moving cleanly, we're not chopping. This is a bad, bad, bad trade. Next, we have this one right here. This is not awful, but this is what I was talking about, taking the bottom of the trade, right? We don't have no internal low. I guess you can kind of say this is an internal low, and I did get break even on this trade, but this is something that is a little bit lower probability, just simply because you don't really have a low. What could have played out from here now is we get this retrace up, and then we continue lower. That's something that I think could have been useful. Let's see if it actually works. Meh. Pretty bad day today. Pretty slow day. But pretty much took the low of the market this morning, and it did not play in my favor, simply because where do we see anything internal to our left? It's pretty much like if we were just taking a trade at all-time highs and we just took this. Like, what are we doing, right? There's nothing to our left. We're just longing into thin air. Right here, we're shorting into thin air. Yes, there are some things to our left, and yes, I could probably find a better example, like something like this. Um, Remember, I don't know what's to the left of this. Also, 4 in the morning, but something like this. This is a terrible trade to take. Your top blasting, I like to call it, or bottom blasting, as the trade I showed before, where you're literally taking the top of the move. You have no idea if price is going to retrace off this candle or anything. You're just taking it straight off displacement. What you would want to take is something like this. Why? We put in that retrace, and we actually have an internal draw to go break even at. It's right next to us, right? So those are some good and bad examples of the trades I take. Hopefully that helps you guys out. But like I was saying, all we really need is market needs to be trending on the high time frame and the low time frame. We need to have a strong, high probable draw on liquidity that price needs to hit in order to continue that trend. Low time frame, we must need a pullback, or we must have a pullback and a continuation candle. And the continuation candle needs to most likely be displacing with very high volume compared to the retrace. um, Lastly, I want to go over for this is you guys need to have your own data. I trade a discretionary trading model, meaning I don't trade nothing like, okay, I see an IFEG, I'm going to take this trade. I trade discretionary. I see a good drawn liquidity and I take my entry based off of that. I don't trade nothing like liquidity sweep or anything like that, SMTs. I literally trade continuation, meaning pullback, displacement, continue higher, continue lower, something like that. But you guys need to be taking your own data because every single time I take a trade, I do how can I improve, and it's helped me a lot with discretionary trading at least because you're not always going to have to take the same setup every time. You're going to have to learn to adapt and figure out what works and what doesn't. So recently we're trading at all-time highs, so I'm collecting a bunch of data on all-time highs and what works and what doesn't at all-time highs. So let's just say next month we have a bearish market. Next time we're at all-time highs, I know how to trade it and I know how to take the best setups. But that's about it I got for you guys. I will probably continue making videos like this, like whole strategy breakdown. Just let me know in the comments if you guys got any trade ideas or video ideas. But hopefully you guys enjoyed this one. I'll catch y'all later. Peace.